Thanks, Liz. Welcome everyone today to our weekly webinar. Today we'll be discussing the reports in Design Manager, specifically created to assist in monitoring cash flow into the company at a variety of levels. Design Manager uses accrual accounting, which is the suggested method for interior designers and general accepted accounting principles. In accrual accounting, it does not rely on cash transactions to determine the fiscal standing of the company. Rather, it uses the transfer of ownership of a good or service as represented by the client and vendor invoices to do so, regardless of those invoices have been paid. That being said, it's still important to review the movement of funds in and out of the company in order to avoid ever getting to a point where available cash is at a dangerously low level. Now, the reports that we're going to be reviewing are nearly identical in both Design Manager and Design Manager Professional, with one exception. So I'll be using Design Manager as our primary platform today, rather than switching back and forth between the two and avoiding any confusion. So let's go ahead and get started. Let's begin with the Project Cash Flow Report, which is under our Project Management Reports, Project Cash Flow. And that is called the Project Order Cash Flow in the Professional platform. Exact same report, just a different overall name. Now, the Project Cash Flow shows funds coming in from the client as deposits and retainers and payments on invoices, and then going out as payments on vendor deposits and vendor invoices. As most firms generally are only working on a few projects at a given time, monitoring the cash flow at the project level, which the Project Cash Flow does, it often directly projects to the overall company's cash flow. And personally, I find the report to be one of the more intuitive cash flow reports available, as it shows the transfer of funds on a per transaction basis, and you can really watch and monitor how your money's coming in and out. So let's go ahead and run one off for our example today. And let's see what the report shows us. Here we go. First, immediately your eye is drawn to the Project Cash Flow Summary, which, once you become familiar with the report, can quite honestly be all you need to review for a per project basis. But I like to take a look a little deeper into the report to see where all of these summated figures come from. So let's go ahead and do so. The report is broken into 4 sections. First off is our Client Retainers and Deposits section, which shows all the funds received from the client at the beginning of a project or a phase within a project in the form of client deposits and retainers. If we take a look, there's only a few examples here. We have 2 deposits on separate proposals, Proposal 1 and Proposal 2, and we also have a retainer that were received a few weeks after the original deposits were received. If we look at the columns, we can really see some of the information this report shows us in great detail. The invoice or proposal number column will always be empty in this case, but for our deposits, we'll always show the proposal number associated with that deposit. Recall that you must put a deposit on a proposal. Retainers, however, will never show anything in that column because they are unallocated or freely distributed funds. The type column will say DEP for deposits and RET for retainers, as being intuitive as possible. The date comes from the date that you type in onto the new cash receipt window. The description is our extremely helpful but completely optional transaction descriptions. Now, Design Manager does default some transaction descriptions for you, like when you're creating a deposit on a proposal, but I always try to enter them in if one is not created for me, such as additional retainer, because I find them invaluable when I go to review information that I may have entered months prior. The vendor column will be blank in this case because there's nothing to do with the vendors on client retainers and deposits. The transaction number is the unique cash receipt transaction number for the deposit or the retainer. Now, don't be alarmed if you are looking in Design Manager and you see several transactions that might have 10,000 in this example. Because you can have a transaction 10,000 for a cash receipt, for a client invoice, for a journal entry, etc. They all have their own unique numbering systems for those different types of transactions. The check number is the optional check number you can enter when recording the cash receipt from the client. And for our fiscal columns, the only one that will be filled in for the first section is our deposit column. And this represents the actual money received as a deposit or a retainer. Those are then summated under the total deposits retainers received. This represents all of the funds we have received from the client, presumably to begin ordering from our vendors or to maintain funds on hand for future use. So that is a very self-explanatory section representing initial funds coming into the company. The second way that you'll be getting funds from a particular client would be as payments on invoices. So the second section shows all monies received as payments on existing invoices, along with the application of the deposits or retainers that we just reviewed in the section above. For example, our first transaction here is an invoice for $937.50, and immediately below that we see a payment on that invoice for that $97.50, reducing its balance due. My invoices 10,001 and 10,002 are yet unpaid, so they have a running balance due. Let's take a look at the columns in this case. The invoice or PO number will only show for payments on invoices. We don't show the invoice number in this column because the invoice transaction number is always the invoice number, and it would simply be redundant. If we entered in a proposal number when we're creating our new invoice into the proposal field in the new invoice window, we'd see it displayed in the proposal column only for invoice transactions. The type, again, is very self-explanatory. INV for invoices, PMT for payment on invoices. The date would be the date we typed into the new invoice window or the new cash receipt window. Our optional transaction description, no vendor, and then the unique invoice or cash receipt number. And again, as I said before, we have an invoice of $10,000 and a cash receipt of $10,000. Don't be alarmed if you see that number duplicated behind the scenes, as each transaction has its own numbering system. The optional client check number will be displayed for payments only. Now, let's look at our fiscal columns. For invoice, the first would be the gross invoice amount. This is the invoice total, including sales tax, prior to any reduction in the balance due by an applied deposit or retainer. For example, invoice 10,001, we have a gross invoice or original amount due of $20,825 and change. Now our deposit column shows the application or reduction of that invoice amount by the originally received deposit, which leads us to the net invoice column, which represents the original total balance due on the invoice prior to any subsequent payments coming in. If you look here, we can see invoice 10,001, here's our deposit of $9,917 and change, which we actually received on the same proposal weeks prior. Same with the $968 on proposal number 2. So we can actually track our deposit application very conveniently on this report as well. The payment column will only get filled in for, of course, payment transactions and represents a reduction or any payments on the current balance due on the invoice. For example, we can see our payment of $9,750 on our invoice 10,000. That leads us to the running balance due. And this is the total amount the client currently owes on all outstanding invoices. And it really represents the current accounts receivable balance for the project itself. And more importantly, it actually represents an indication of a future cash flow. Let's examine. So our first invoice, $97.50, is paid. The running balance due immediately goes back down to 0. We then invoice again, the net invoice of $1090.08, no payments yet, so now our running balance due increases. We invoice again on 10,002 with a net invoice of $1065. That is then added to our current running balance, yielding us with $11,973.70. So that amount is what the Carters currently owe us on their Pennington home. Moreover, I can look at that amount and project that I'll be receiving those funds at some time, hopefully, in the near future. Further, we also show the available deposit and retainer. This is the sum, or the difference perhaps, between the retainer deposit we've received in the first section less all of the applications. So if we take our $20,885.18, reduce it by $10,885.18, that leaves us just with our $10,000 of available deposit and retainer. Now this is important because we can assume that these funds will be used at some point against future invoices, or they might be used as applications to our existing AR for the client. So when calculating or projecting how much funds will be getting in from the Carters, we need to consider, will this $10,000, which we did indeed receive as a retainer, be applied to our current AR, indicating that we really won't be having $11,973 coming in, but rather $1,973.70. So all of the information is there for us to discern how much we can project we'll be taking in from funds for the Carters Pennington home. Now, that handles the funds coming in. Let's take a look at the funds going out. So the third section of the report shows us our vendor deposits. And these are funds that we have sent to the vendor in order for them to begin processing the order. And if we take a look, this section is also very straightforward and intuitive. We can see a deposit sent on purchase order 0001 for $1,250, which we then immediately create a check for and reduces that amount, indicating that we've created the vendor deposit and quickly paid it and sent it off to the vendor. And we can see we do this repeatedly in this example. We have our deposits and we have the checks that pay them. Notice, however, our deposit on purchase order 4 for Kravit is indicated as a credit card payment. So in this case, I'm not going to be expecting a second subsequent check entry. Rather, I see the deposit itself and the payment immediately. Payments to vendors made with a credit card will never have any effect on the cash flow of the project. They will have an effect at the company level, as we're going to eventually need to pay the credit card. So these type of transactions always net our cash out to zero. Let's take a look at the columns for a little further in-depth analysis. Of course, we have the purchase order number of the deposit and its associated check. The types would be deposit and check. Now, the CHK for check, that could also indicate a computer check we generated through Design Manager, a hand check, a wire transfer, or any of the other mechanisms except for credit card payments would all be indicated with the CHK. The date is the date we typed into the vendor invoice or processed the check, hand check, or wire transfer. Transaction descriptions will be displayed here, as I have one listed for our initial deposit. The vendor code for both the deposit and the check are listed. Likewise, we have the unique vendor payable transaction number and the unique check number transaction number as well. For the check entries, we'll see Design Manager's automatically created check number for those we print through Design Manager. I'd also see the hand check number that we typed in manually. If I did a wire transfer, I would see the WT number, or I even see the credit card CC indication that I paid the deposit via credit card. I'm not going to have anything in my gross invoice column for this section, but I will, of course, fill in the deposit. This is the amount of the deposit itself. There's no net invoice in this case, but for all of the check payments, we will see the amount of the check in the payment column. And again, when we have a deposit paid via credit card, we'll see the payment listed immediately. The running balance due shows us the total amount the company currently owes on any deposits. So as we have our deposit come in, we have a balance of $12.50. Then our payment immediately takes that down to zero. Another deposit, ironically, of $12.50, and then its payment. And we can see the deposit and payments balance themselves out, which is very common in the deposit cases since you need to get those funds transferred to the company as soon as possible. Otherwise, they won't be taking your order very seriously. But we can see our running balance is zero. This indicates that we have an accounts payable of zero on our vendor deposits. So I'm going to have no effect on my cash flow in the future as all of my deposits are currently paid. Lastly, the fourth section we have is our vendor invoices and payments. Now this shows us all funds we send to the vendors in form of vendor invoices with checks, credit cards, hand checks, etc. on final or partial bills from the vendor. Let's take a look at some of these transactions. We have a vendor invoice, transaction 10,020 here, which we have utilized deposit, but not yet paid. If I had a payment associated, just like the deposits above, the check would be listed immediately beneath it. So these represent vendor invoices that are currently in my accounts payable. Our invoice for transaction 10,022, I do have an invoice, but I can see I have a check payment as well. So just like the vendor deposit section, we're going to see each of the vendor invoices we've created. If they've been paid via check, the check will list immediately beneath it. And if it's been paid via credit card, as in Krabbit's case, we'll see the invoice and the application of the deposit and the payment itself. Once again, those credit card payments will have no effect on our cash flow. So let's take a look at the columns to get our final analysis on our vendor invoices. First column, we're going to see the actual vendor invoice number that we typed in on our invoice to project purchase order window. We're not going to have anything in the proposal column, of course. The type, INV, would be the vendor invoice. Check, again, any hand check, computer check, wire transfer would all be listed as check entry. The date is the date we typed in on the vendor invoice window or the date we processed the check. Transaction description, of course, the associated vendor code for the invoice and check, our unique vendor invoice transaction along with the check transactions. We have our computer check number, our hand check number, wire transfer number, and even our credit card indication located in the check column. And then we have the majority of our fiscal columns being filled in. For example, we have the gross invoice for our first example was $2,500. This represents the entire amount due on the invoice prior to the application of any deposit. So the deposit column will show us that if we have sent a deposit prior, which we can see we did indeed on the section above, will be listed in the deposit column, yielding us the net invoice. This is the amount that the vendor had actually sent us on the bill. The gross invoice less the deposit is what we call the net invoice. Any payments for checks or credit card payments will be shown as reductions in the payment column, and the running balance due will show us all of the amounts that the company currently owes on all of our vendor invoices. So we can see we had a net invoice of $12.50 for vendor AMMAT. We then record one for Baker for an additional $14.50. Add that to our $12.50. We now have $2,700. We have another invoice, which we had a balance of $1857.50, brings the balance due up to the appropriate amount. But then our check immediately brings us back down to our $2,700 for our two outstanding invoices. And then all of the subsequent invoices were paid via credit card, so our running balance due stays at $2,700. In fact, We can even see those two invoices. Here's our $12.50 and our $14.50 on our checking window, again indicating that these need to be paid. So at the bottom we have totals for all, gross invoice, application of deposit, net invoice, all of our payments, and our current running balance. The open accounts payable, this represents how much do we owe our existing vendors for invoices right now for this client. In other words, if we're thinking about cash flow, I need to factor in that I may have X amount of cash, but I still owe $2,700 on this project. The vendor deposit available lets me understand, well, how much money have I already sent out? In other words, I might have bills coming in, but I've already prepaid some of these bills, and I'll be able to use that on future invoices. Lastly, we have a final section for miscellaneous project-related expenses. When creating an operating expense in Design Manager, you have the ability to join that back to associated projects to get reimbursed. So that if there's any of those in the project's case, they'll be listed in a final section. For example, we had a FedEx charge of $55 that, according to our report, is yet unpaid, and indeed, there it is on our cash, on our checking window, waiting for a check to be written. So they'll be listed as a final section to also be compensated for and included in your cash flow analysis. Now, we've gone through step by step on the cash flow report. Going back to that cash flow summary, let's take a look at what this really tells us. Well, we see the retainers coming in, $10,000, which matches our retainer transaction. Deposits on proposals, total of $10,88,518, which matches perfectly. So our total deposits and retainers is $20,85,18. Payments on invoices, we have one for $937.50, as shown here. So this represents all of our positive cash flow. Our retainers and our deposits and our payments on our invoices are the funds coming in. Then we can see the funds going out. Vendor deposits paid, we have $49.77.50. Note, however, one is paid via our credit card, so that one will be listed in the paid with credit card figure, while the vendor deposits paid will be summed, those being checks will be summed here. Same with vendor invoices paid. We have a total of $3,119.50, though several are paid via credit card, so it's broken out into the vendor invoices paid and the paid with credit card. So this shows us the payments we actually made as checks and payments that we will need to be making to our credit card in the future. So we add up all the cash coming in, take out the checks we've already written, and then the future payments, we come up with a cash balance or a net cash flow for this project. What this does not take into consideration, however, are future receipts or payments to vendors. So we do have $11,973 and change, assuming to be coming in on unpaid client invoices. That is not in our projected cash flow, nor are our unpaid accounts payable or the bills we still have to write checks for. Those will be future cash payments. So this is an indication of how much we've netted our cash just on this project. So that is the project cash flow analysis report. I try to go through it step by step, showing how all of the pieces work together, but once you become familiar with the report, the cash flow summary I find to be a really invaluable tool. Liz, I can pause for some questions on that report before I continue.
Hey Brad, we do have a question that we haven't answered yet, and that one is, if my cash balance in the summary shows as negative, does it mean that I am losing money?
Not necessarily. It means right now that you have sent out more payments than you have taken in. So, in your case, in the attendee's case, there might be many unpaid client invoices. For example, in our second section, there could be a large running balance due. Or again, that reflects money that we've invoiced to the client but have not yet received. So if there's a large amount in the client invoice and payments total here, you can project that you'll be getting those funds in, and that will be reflected over time as a positive increase in your payments on invoices, meaning that you'll then get a positive cash balance. If at the end of the project there is a negative cash flow balance, then that could be a problem. And we need to then indicate, well, did we invoice incorrectly? Did we not receive all of our funds? Did we write off invoices? Did we overcharge our vendors? Were we overcharged by our vendors? Those sort of things. So the current cash balance is not indicative of whether or not you're losing money. You do need to factor in the future increase in funds from your accounts receivable balance here and the decrease in funds from your accounts payable balance here. Excellent question, and I'm glad they gave me a chance to elaborate on that distinction. Are there others, Liz?
Brad, that's it for now. Thanks.
Okay, tremendous. Well, now let's transition from a pretty straightforward project level report, and we're going to stretch our brains a little bit here and examine the company level cash flow statement report. The cash flow statement is one of the classic financial reports along with your income statement and your balance sheet. Now, because the income statement is prepared under the accrual basis of accounting, the revenues reported may have not been collected in cash as we just saw with our cash flow report. In other words, we're going to have outstanding balances on those invoices. Similarly, the purchases and expenses recorded for the project on the income statement may not have been paid yet. I might have a large accounts payable balance, as we did see at $2,700 on our cash flow analysis report. Now I could take the balance sheet and I could determine the amount and manually construct a cash flow on a company level, but the cash flow statement already integrates all that information. And as a result, savvy business people and accounting professionals really gravitate towards this important financial statement. It does, however, take a little bit of getting used to, so let's go through that. Now, the cash flow statement is under our general ledger reports, and then further under financial statements. And there's our cash flow. Let's take a look. In our example, let's run our cash flow through the beginning of the year to the end of this month. Here we go. A bunch of random numbers, seemingly random numbers. Let's go through these and describe what's really going on here. Now, the net income. This matches my current net income for the year as I could see on my balance sheet and income statement. Now the report, the cash flow report, is going to convert this into a reflective change in cash based upon other fiscal activity that affect primary income statement and balance sheet accounts. So if we had billed and received payment to all of our clients in the same period from January through today, and we've gotten all of our bills from our vendors and paid them all within that time frame, well, the net income really would reflect the positive increase in cash less any investments or other company expenses that would be taken quote-unquote off the top of that. But as we know, that's simply just not the case in the way the business is run, so this makes this report really useful once we can kind of understand it. The best trick that I have learned in looking at the cash flow statement is when you see numbers in parentheses, these indicate undesirable situations for cash flow, but they might be good on the balance sheet. Now, positive numbers represent cases that are really good for cash, but maybe bad on the balance sheet. So let's take a look at what all this means. So again, here's our net income for the year we have accrued so far. Accounts receivable. My change in accounts receivable from the beginning of the year to now actually went up by $12,063.98. Now, this positive net income here is predominantly due for me invoicing the clients. But since this is really unpaid income, I need to pull those funds out. So anything in accounts receivable, we need to remove off our cash flow. I have it in my net income, but it's done nothing to help my cash balances. Hence, the negative value here. So any increases in AR will actually reduce cash flow. Similarly, work in process, WIP. My work in process actually increased by $2,200 in the time frame, and this represents purchases that I've made from vendors, but not yet invoiced my client. So not only have I sent cash out to my vendors, but I haven't even gotten to the point where I've created an invoice. It's not even in accounts receivable yet. So this amount has got to reduce our cash as we spend this money but have no chance for repayment yet. Once I do invoice these goods, for example, if it was a straight $2,200 bench, if I invoiced it and it was not yet paid, it would move from work in process and further increase our AR, again, having to reduce our cash flow. Vendor deposits. Well, these actually went down from January to now, so I've actually been sending out less funds as prepayments in this time frame. I'm hoarding or I'm keeping the cash to myself. That's a good thing when you're analyzing cash flow. Further, I might have actually received funds back or have negative vendor deposits coming in that a particular order was canceled or what have you. Again, I'm withholding or retrieving more cash. Lastly, I might have actually invoiced some of the goods that had a vendor deposit on it, so that would have transferred into work in process. So those two, the positive and the negative, would balance themselves out. So in general, reductions in vendor deposits are positive for my cash flow. Likewise, and somewhat counterintuitively, is accounts payable. Well, my accounts payable actually went up in this time frame. So these are bills that I received from the vendor but have not yet paid. And these could be included in WIP or even the net income, and that represents a benefit to the cash flow. Because if we think about it, I'm receiving goods or services and not paying for them. So I'm increasing my overall cash flow because I'm not paying for my bills. This is great for cash flow. It might be bad for the balance sheet as I'm holding a large liability on here. But as accounts payable increases, it actually is beneficial to the cash flow. Client deposits. Well, these actually went down by $967.25. So money that we receive for goods and services, i.e. deposits or retainers, that we've not yet invoiced for, is great for cash flow. I'm taking the client's money in and holding it for myself. But as I utilize these client deposits on invoices, I'm moving some of that funds into accounts receivable, but moreover, I simply don't have access to those funds any longer. So as my client deposits decrease, it's negative, or it's counterproductive for my cash flow. Lastly, sales tax. Well, my sales tax went up as I've invoiced several times in the last 4 months, and this represents money that I'm going to be receiving from the client. The client has to remit these funds to me for sales tax, and I can hold on to that cash. Now, eventually I'm going to have to pay that to the appropriate tax authorities, but again, as a flow of cash, increase in sales tax is beneficial. So I'm taking those funds in from the client in the near future, and I can hold them until I see fit to pay my tax authorities. So all of that takes a little bit of analysis. And there are several good websites out there if you simply do a Google on cash flow statements. But what we're doing here is showing how various activities in Design Manager reconstruct our net income into a cash flow. So once we remove our AR, our work in process, and our client deposits, and add in our vendor deposits, AP, and sales tax, we've taken this $9,841 and change all the way down to just under $385. Let's keep going. We don't have any investing activities, so this, if I did have entries here, that would be represent like transfers of liquid funds into stock or purchase of equipment, increase in fixed assets like buying a car, those sort of things, which ultimately reduce our cash flow because those funds are transferred into a different aspect of the company. But we do have quite a bit of credit card activity. So my American Express balance went way up. As we saw in our cash flow report, we had several purchases that we put on the American Express card. Well, cash flow loves us to use the American Express. Why? Because we're doing purchasing without touching any of our funds. So when we make purchases on the American Express, it actually increases the cash flow because we're simply pushing off that debt. So we add that back in to our 384.73, and we can see the report calculates our net increase in cash for the time frame as 75.1750. This represents us converting that net income into, hey, how much are we actually going to increase our cash balance by because of all these activities? What I find extremely convenient is the report even then shows us our beginning cash balance and ending cash balances, and that matches this figure precisely. For example, if we look at our account inquiry report, and in our sample data, I simply have one cash account, we can see our opening balance started at 160.83. Indeed, it did on the cash flow statement, and ended at 26.78.33. Also shown, the net difference, 75.17.50, which matches the report's calculation precisely. So albeit the accounting behind the scenes may seem a tad difficult, and I agree that it does, the report is wonderful. If you just trust what it's doing behind the scenes, it'll take that net income and break it out into an actual cash flow difference for you, and it'll even cross-reference that to all of your cash accounts. So that is the cash flow statement report. Now, what does all of that mean? Well, why is this helpful? Well, the report's really comparing the cash from operating activities to the company's net income. Now, if the cash from activities is consistently greater than net income, for example, if this increase is greater than our net income over time, it's said to be, the company's net income is said to be of a high quality. In other words, it's a very strengthful or a great position for the company. If the cash from the operating activities is less than the net income, this kind of raises a red flag as to why you're not converting that income into cash. Secondly, a lot of investors or financial advisors follow the cash is king motto. The cash flow statement identifies the cash flowing in and out of the company. So if we're consistently generating more cash than we're using, as we are in this case, the company's strength as a financial viewpoint increases. So you can add more employees, you can get more fixed assets, you can purchase another company, you can have bigger owners or investors draw, etc. So the report is often used when you're talking to your financial advisors about the overall strength of the company. Liz, any questions on the extremely helpful yet somewhat difficult to understand cash flow statement report?
We do have one question.
Shoot.
That question is, what does a negative AP mean?
Well, a negative AP. In this case, my accounts pay, that would represent, if the attendee is asking if my accounts payable has decreased over time, that's wonderful for the balance sheet, but for the cash flow, it's not desirable. Why? If your AP has decreased from the beginning month to the ending month, it means you have spent a lot of money paying off your bills. So your cash flow has gone down. Again, wonderful for your balance sheet as your liability is being alleviated, but for the cash flow report, a negative or a reduction in accounts payable reduces the cash flow. In our case, our accounts payable went up means that we have bills out there that we haven't paid, so we're keeping the cash to ourselves. So it's the opposite of our example. Excellent question. Is there a follow-up on that one, Liz?
Yes, the attendee just said that there is a negative number.
Okay, so if there's a negative number on their report, it means that their accounts payable has reduced in the time frame. What does that mean? It means, well, that they have paid more bills than they have taken in that time. If we think about it just conceptually, they've sent out more cash over that time than bills they've accrued. So their cash flow gets reduced over that time. So when your AP goes down, it also reduces the cash flow on the cash flow statement. If the AP has increased in that time frame, well, that's actually going to show as a positive increase in cash on the cash flow statement. Does that answer?
Yeah, it's great, Brad. Thank you. And that's our last question.
Excellent. Again, the report, this is one that you could take a little time to massage your way through, or even do a little research with your accounting professional or online. And you could really, once the numbers become a little bit more indicative and intuitive, it really is a wonderful tool to analyze the strength of the company as analyzed at a cash basis. Now, let's move on to a little bit more intuitive reports. I'm going to hop over to the project order status report under project management, order tracking, project order status. Now this report traditionally is used as it has an amazing amount of detail regarding your specifications such as order tracking, general status benchmarks, etc. But it's often underutilized as an answer to the question of how much cash per item is mine, or what is our cash flow situation on a per item basis. So let's take a look at this report. First of all, we of course have all of our ranges. If we leave the ranges blank as in all reports in Design Manager, that'll show us all the entries, but we can narrow down the scope of the report by inputting ranges such as the project range, location, even a particular proposal range within a given project. The show full description will allow us to see the entire description, which can lengthen the report. The exclude completed items. In general, when you're just trying to review the status of an item or how it's progressing through the design cycle, it's better to exclude those. But in our case, we would not want to do so. I want to get an indication of all of my items, completed or not, and the entire effect on the project as how my cash has changed because of them. So I always opt to do no when I'm looking at the project order status for cash flow. In progress items, we want to leave this, progress items only, we want to leave this set to no. What this indicates is, do we only want to see items that have a purchase order but are not yet invoiced to the client? Again, very handy when I'm doing order tracking, but I want to see all of my items so I can analyze my entire cash flow, so I leave this defaulted to no. We have to use the new version because that's the one that has this cash flow analysis. And the show status, I also leave defaulted to yes because it's going to show me a lot of detail that represents the transactions behind the cash flow. If I hit no here, I do decrease the size of the report, but when analyzing my cash flow, we'll leave that set to yes. Let's go ahead and put in project for an example and see what we shall see. Here we go. Here's our project order status for a single project, the Carter's Brigantine Beach Home. And let's examine just the first item. We have our reference number. We have the description. Looks like it's some signature upholstery from Century, which is great. Their proposal number. We have our cost and pricing information, our estimated cost, price to the client, estimated tax, and then the total estimated is the sum of those two. Any deposit we requested is listed here. And now we get into the information that is really the cash flow aspect of it. And that begins with the invoiced amount. This represents how much we actually have invoiced the client for this item. In our case, we've invoiced it in full for $774.90. And you can further see that information in the status that we had invoice number 10,003. We invoiced it for full, and further, we received a deposit of $369 back in December on check number 3340, and we have a current balance due on this item. In other words, we have an unpaid balance of $405.90. So we've invoiced it in full. Now our payment column. The payments show both deposits we've received and payments on the invoice. Well, this is at $369. That represents the deposit we received initially back in December for $369. Once we get this item paid in full, that will increase by another $405.90. The paid vendor. This represents all of the actual checks or other forms of payment we've sent to the vendor. If we have vendor invoices that we've recorded but not yet paid, i.e. they're in accounts payable, waiting for us to cut checks, they will not be included here. So this actually represents physical payment transactions. That brings us to the O vendor, which can be a little complicated to calculate, but it says basically when we don't have any vendor invoices in yet, but we do have a deposit required and haven't sent that deposit, that amount will show there. As indicated down here with a little asterisk indicates that this will be a future deposit being sent. If we did send a deposit, the O vendor would be the difference between the estimated costs less that deposit. If the purchase we did get the vendor invoice in and haven't paid it, that would be the amount. So the O vendor is very dynamic, but it's a very good indication of what we're going to be owing in the future. So that leads us to our plus minus cash flow column. What this indicates is the payments made less the paid and less the O vendor. Okay, so we've received $369. We've paid out $580. We don't have any future estimated to be owed, so right now this item is at a negative $211 cash flow. Well, that sounds pretty disheartening, but remember, if we look at our status, we still have yet to be fully paid for the item. We have an AR balance, an accounts receivable balance of $405.90. Once the client remits payments, we're going to remove that negative entirely and actually go up into the positives. So this allows us to get a snapshot and actually a very accurate indication of the effect on our cash on a per item basis. And it does so for each of the items and even the components, as we can see the O vendors in there, and also by location and even for the project as a whole. Down here we can see, well, we have a negative cash flow currently for the entire project, but we've only invoiced $2,200 out of an estimated $10,073. So we have quite a bit of invoicing to do for this client, meaning that we can expect a whole bunch of payments to be remitted. Further, we also have a retainer of $2,000 that we're holding also in our cash flow that can be utilized on further invoices or to reduce the accounts receivable. So this is a really handy report to easily see at an item and project basis how we're doing cash flow wise for a given project. Liz, question on the project order status report when used just as a cash flow analysis report, which again is very often underutilized for, but when I show clients they do find it very handy in their cash flow analysis.
Brad, we've answered all the questions about this report, so I think we're good to move on.
Excellent. Okay, that brings us to a final report that also requires a bit of examination to really get to discern all of its information. It's called the project cash allocation, and it breaks down cash flow to the item level, but is only available to the professional users as this type of detail is only on the larger platform. So let's take a peek over at our professional, and we'll look at the project cash allocation report. And this also has a variety of ranges: the project, location, sales category, proposal number. You can group your items by sales category, by location, or even a one line per project in the project summary format. The items with no cash received option, that allows us to filter out items that we have no funds coming in for, so they don't clutter up the report. These have no effect yet on our cash flow, so people will often filter the report down by excluding them. I like to include them so I can see my potential cash flow based upon these in-transit items. So let's see what this report shows us. Here we go. Here's our project cash allocation for our Carter's Pennington home. I've grouped it by location, master bedroom, time, wine cellar, etc. And once again, we are hit with a wide variety of information. To minimize it, let's take a look just at this guy a little bit bigger, perhaps. There we go. At the first item, our bed frame here. Now, the first set of information is all of our estimated figures. Here's our estimated cost, price to the client, and even the estimated sales tax. Those are the figures that we actually type into our component window and are summated for the item itself. The cash received is our funds coming in. So we have received a deposit, $33.60, a payment of $1694.06, and the total of the two. If we take a peek over at that item, we can see how all the information translates. Here's our cost, matching in the bottom of the item window, price, also matching. Sales tax matches as well from the pricing tab. And even on our status tab, we can see we did indeed receive our $33.60 and have a payment of $1694.06, yielding our total amount of $5,054.06. But we still do have a balance due on this item of just over $2,000. So there's going to be another influx of cash. Back on the report, the next section is our current allocation. This is going to be a breakdown of where we have spent our funds so far. Well, we've actually paid our vendors $2,500 so far. This again represents actual check or credit card payments, not unpaid bills. This is our cash flow. So we've sent out $2,500. The item has been invoiced, so we do owe this sales tax. So we're going to pull our sales tax out, as we know that we're going to have to remit that to our tax authority in the future. The sum of the two is in the total column, and here the profit, or the cash plus, basically represents the cash received less the current allocation total. So here is our immediate current increase or profit on this item. Fantastic. But this item still has quite a bit to go. We have to finish paying our vendor, and we're going to be expecting some more funds in as well. So now let's look at our estimated future cash allocation. Well, if all things go as planned, we will be paying the vendor a full $520, as indicated by the original cost. That could be slightly more or slightly less. We will indeed be paying the tax authority $336, so our total future, in other words, what do we expect we will have paid out for this item at its completion? Well, that's $5,536. So now, when we take our cash received in, less our future allocation total, we're standing at a negative $481 and change. Well, again, that's somewhat disheartening, but remember, this invoice payment is going to be expecting to go up by just over $2,000 when the client decides to pay this in full. So this will go up to approximately $3,700, and now our cash flow will be quite on the positive for this item. And all of these items were included on the same invoice, which is not yet paid in full. So we do see all of these negative cash flows. So this report breaks us down very detailed on what we are and expect to be getting in from cash for the item and what we expect or ultimately will be paying out. And then we can see the report summates both by location and as a grand total as well. So over time, we're going to see this number go way, way up as the client finishes paying us for all of our unpaid invoices. So the project cash allocation also takes a little bit of time to digest, but once we do, it does sort of answer that question of the what portion of the money is mine question that larger firms tend to want to analyze upon. That brings us to the end of our discussion of cash flow reports today, and we've gone over many reports in Design Manager created just to monitor cash flow at the item level, like the project cash allocation or the project order status report, the project level, like the project cash flow, and even the cash flow statement, which analyzes the net effect in the company as a whole as far as the influx or reduction of cash goes over time. I recommend spend some time with each of these that are available to you to really see which ones are going to be most beneficial for yourself in reviewing your cash flow, your company's cash flow over a given time frame. And with that being said, Liz, I'll throw it back. If there's any questions out there, I'll be happy to answer them. Otherwise, I'm going to give it back to you to conclude today.
Brad, we have no more questions that we haven't answered, so I guess I will conclude our webinar today. Thank you for attending, and thanks, Brad, again. We are going to end things here, but we invite you to email support@designmanager.com with any other questions you have about the software. We hope that you enjoyed today's webinar, and feel free to attend again next week as we have our weekly webinars on Thursday. If you would like to see a recorded version of this webinar or you missed a previous webinar, please visit our YouTube channel at Design Manager Training. Thank you and have a great afternoon.